Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News9 where we break down the day's action on the Lal Street. And the markets, they kicked off the week at record high levels with Nifty, Sensex, the Midcap index and Bank Nifty all scaling fresh peaks today. The market started the day on a strong note amid a positive handover from the global markets. Nifty opened above its congestion zone of 22,500 to 530 odd levels, a level which it had, by the way, struggled with in the last few weeks. And the good part overall is that we never went back to those levels. We never tested those levels throughout the day. So perhaps we have left behind that congestion zone of 22,500, 530 mark for good. At least for now, and how the setup is looking right now. Now we did make a fresh record high within the first hour of trading itself. Until about 1:30, the only way the market was moving was up. But around that time, some bit of a volatility kicked in at 22,700 odd levels, and the index, pretty much traded sideways for the last couple of hours. But still, the Nifty managed to close just about 30 points away from its record high. Sensex also surged about 500 points today and also made a new record high of 74,869, but ultimately closed about 125 points below it. Moving on to the broader markets, the Midcap index made a fresh record high as well. It's the third fresh record high for the third straight session where the index has surged to a record high levels. And by the way, it is now on a 11-day winning run. And even when if you go back in March when we were witnessing that bit of a meltdown in the broader markets, March 14th was when the sentiment overall was at its weakest. Since then, the mid-cap index has rallied about 10.5%. The small cap index, on the other hand, is also on a 12-day winning run. The index has rallied by about 16.5% from its March lows and is just about 284 points shy from its record highs. But moving on to the sectors, overall the participation was good. Auto was a top driver for the markets today. That index rallied over 2%. Metals, realty, both indices also rallied close to about 1%, in fact over 1%, both indices. But a special shout out to the banking pack because Nifty Bank has made a record high. It has hit 48,716 mark in today's session, and this is the first record high for the banking index since December of last year. And the good part is it's a large cohort of private banks that are also driving this upside. For example, HDFC Bank was solely, pretty much responsible for majority of the gains that came for Bank Nifty last week. But today, it was Axis Bank, ICICI Bank, SBI and IndusInd that led from the front. But that's enough from me. Joining us on the show now to share his views on the market is Mr. Shrikant Chauhan, Head of Research at Kotak Securities. Sir, thank you for joining us here on Last Tick. And the markets, they have finally broken out of that congestion zone we have been talking about, 22,500 to 530 odd levels. And this move, it's been driven by multiple sectors. Last week it was the banks and the realty stocks. Today it was metals and autos. Looks like we are truly on that pre-election rally that everyone was hoping for, isn't it?
Good evening. What you're saying is right, because always whenever there is any event, we see similar sort of momentum in the market and similar sort of buying interest. For example, like if we are moving towards the major event of like election, then the broad-based rally should emerge in the market, and that is what we are seeing. And in fact, in the previous month, there was like good amount of profit taking, but despite that, in the last few trading sessions, we saw very strong comeback. So the broader pattern of the market is still indicating us that there is good amount of liquidity support in the market, and that is actually helping the markets to move higher. Today, not only BFSI, but also a few real estate stocks and auto companies did well, and IT stocks were also not that bad as they were like in the previous month. So broadly, we are of the view that yes, the markets are moving upward, but again, it is completely momentum and completely news driven based market.
All right. We'll get to the factors that will perhaps pose some headwinds to the markets. We had spoken about it last time, but want to keep it with elections for now, sir, because at this point, I think the markets are expecting political continuity. And I mean, they are factoring in 400 plus seats for BJP this time around. So, do you think, I mean, if there is any disappointment on that front, let's say BJP is only able to rake in about what, 320, 350 seats, what sort of a correction can we expect in our market, sir?
See, like right now there is, I would say the market is discounting to 370, 360 seats. But in case, if it comes to 320 or 310, then naturally it is going to fall. I'm not expecting any a major crash, but yes, there is a possibility that we may see correction more than 10% and max up to 20% sort of correction because
Wow.
see otherwise if we see the fundamentals of the market or of the Indian economy, then they are very strong. So election is something which is like event for certain period, but after that again the corporates will start showing their numbers, and based on the performance of the corporates the market will start moving accordingly. So I am of the view that yes, the disappointment will come, and because of the disappointment we may see some profit taking, and that will actually push the market maximum 20% down from the current levels or maybe from the highest levels.
All right, 10 to 20% correction if the political continuity is threatened, or if BJP is not able to win as many seats as the markets are actually factoring in. But there are other headwinds as well. We had spoken about them last week as well. The crude oil prices, they are now at a 6-month high, have crossed $90 a barrel, and I'm talking about Brent crude here. Bond yields in the US, they continue to strengthen, but I want to keep it with crude prices because largely, of course, it is a negative for us. But one pocket of the market does benefit, from the surge in crude prices, and that's the upstream oil companies, companies involved in oil extraction. ONGC, Oil India come to my mind. But, sir, looking at the stock performances, I mean, both stocks have not done or, participated in that surge in crude prices. I mean, ONGC is down 1%. Oil India is about what, up 1% in the last 1 month. I mean, is there a play here if one expects sustained rise in crude prices?
See, certainly like rising crude prices is not good, is not positive for emerging market, especially like in markets like Indian markets. But also at the same time, what you're saying is right, that if the prices are going up, then this companies like Reliance Industries or ONGC should benefit out of it. But again, government has introduced windfall tax,
Right.
and that is something which is actually keeping or capping the profit for all these companies, and maybe that's the reason they are not participating in this overall up move. But broadly, we are of the view that these companies are definitely going to do well in the long run. So in the short term, yes, because of this particular tax on these companies, we may see a limited upside, but in the long run, we are bullish on ONGC as well as on Reliance Industries.
And sir, I remember last time when we spoke, when Brent was about what, $86, $87 a barrel, you had said we are right at that inflection point, and any surge from here could spell trouble for our markets. We have crossed $90 a barrel. I mean, what's your reading now? Because the markets, I mean, they are pretty much turning a shoulder to the surge in oil prices. Are we in that uncomfortable zone?
See, like if it is going up just because of geopolitical tensions, then it is again going to come back. But
Right.
it is going up because of specific rise in the inflation numbers from US, or maybe the economic expansion in the US and in other countries. Then it will create problem, because then the rise of the crude will remain stable, or the rise will remain consistent for a longer time. So that should not happen. Broadly, based on the news flow, we are of the view that the rise in the crude prices is mainly because of rising geopolitical tensions. Otherwise, crude to remain between the range of $90 and $80. That's the overall house view of Kotak Securities and Kotak institutions. But if this data which is coming in the US, if that remains very strong, and if other countries, developing countries especially, if they start participating, I'm to say, if the numbers from these countries also start showing some more strength, then it will have a problem.
All right, and so you made a great point over there, because earlier the surge in prices we were seeing was because of the tensions that were brewing in the Middle East, but this time around the situation is different. It's not just the Middle East that's adding to the the surge in price, but also the demand that has picked up, especially in US and also in China, and that is expected to pick up more as we go forward. So that perhaps will keep crude prices tight. But we'll move on. RBI policy meet is behind us, status quo out and out. I mean, I think that was what everyone was pretty much expecting. But, Mr. Das spoke about a few things, and we know that, he's a man of few words. So every word, I mean, the market, pretty much keeps a, close tab on what Mr. Das is saying. But he flagged, high public debt in the system as a concern, has called for fiscal consolidation. I mean, if that is a path we are going down the road once elections are done, I mean, do you think that that could hurt the growth, because private capex has just not picked up, and the government, if they continue to focus on fiscal consolidation, where will this growth come from?
Yeah, I think, see, like, the current status of the economy is clearly indicating us that it is going to do well, not in the short term, but in the long run. So now the task is like more upon how the government is going to announce their next overall agenda, and the reforms that they are going to bring. We are of the view that because of the election and all, we are going to see some slowdown sort of activity. But over the period, the way there is like projection on the GDP side, and the way there is a tax collection, I think government will introduce some more schemes which will actually, and even private players, they are also maybe waiting for this election result to come out, because after the election results, they will be more confident in the market, because the election event is something which is very difficult to predict. But because of there is now like a lot of clarity that the ruling government will win these elections. I think because of that, government is pushing a lot of their or maybe infusing a lot of funds, but private players will come only after the some more clarity after the election numbers. So I'm of the view that yes, there is like only participation from the public sector. Maybe the RBI governor is showing his concern, but otherwise we are of the view that private players will very soon join after the election numbers.
All right,
Election.
Private players to come to the party once elections are done. They are waiting for some bit of a clarity. Also, I think monetary easing down the road will also, bring them on board. But moving on, we are entering the fourth quarter earnings season this week, and as always, the IT companies will be the first to come out with their results, and TCS will be the first actually on Friday. We have Wipro and Infosys next week. So, what are your expectations from the IT pack? I think most of us are expecting another weak quarter from them. But do you see any improvement as far as the guidance is concerned?
So it's very tough to expect any improvement on the guidance side, and it is mainly because of there is hardly any rise in the discretionary spending. So that is not there. Also, if we go through with the other aspects like on the mega deal win side, there also hardly any major news flow. So in this particular quarter, in fact, in the previous quarter, there was like some mega deal wins from few companies, but this time that is also not there. And that is the reason we are of the view that it is very difficult to expect any specific improvement on the guidance side from all these IT companies. Yes, there may be some possibility that mid-cap IT companies, they may show some or they may give some better guidance. But if we go through with mid-cap IT companies, then they are already expensive and they are trading with very high valuations. So we are of the view that it is better to stay away for the time being. let the commentary come, let the overall announcement come from all these companies, and then only we can decide about the next course of action.
All right, wait for some clarity as far as the IT pack go, because there have been lack of mega deal wins, and the guidance may not improve, at least for the bellwether companies. The mid-cap companies, they may post a better set of numbers, but as Mr. Shrikant Chauhan puts it, they are already expensive, so keep an eye out on that. Sir, great insights from you. Thank you for giving us time here on News9.
My pleasure. Thank you.
But with that, it's a wrap on this edition of Last Check. We'll see you at tomorrow at 9:45 a.m. on First Check. Thank you for watching.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on 4 wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
Hello and welcome. You're watching Business Plus. Here are the top stories we're tracking at this hour. Wipro CEO Thierry Delaporte steps down. Srinivas Pallia takes over. Resignation comes amid quarters of underperformance and a string of top-level exits. And rising cocoa prices will bite into your chocolates very soon. Amul chocolates set to get expensive by 10 to 20% in coming days. SEBI finds finfluencer Ravindra Balu Bharti asked to pay 12 crore rupees made through unlawful gains, claiming 1000% returns. And Adani Green is set to invest 1.5 lakh crore rupees to build world's largest renewable energy project in Kutch in Gujarat. Adani Group will invest a total of 2.3 lakh crore rupees into renewable energy by 2030. And Vistara is set to scale back operations by 25 to 30 flights daily after recent flight disruptions move to ensure availability of adequate pilot buffer. And the top story we're tracking here on Business Plus, Wipro Chief Executive Officer and Managing Director Thierry Delaporte has now resigned. The software major said it has appointed Srinivas Pallia as the CEO and MD of the company. Now, Delaporte had another 15 months